Welcome back guys to another video. In this video, I am going to show you what a perfect setup on US30 looks like. And the setup is easy to identify and appears at least one time a week. I will show you step by step what you need to look for and how you can start trading this following week. And before we start, if you guys do want to be mentored by me and learn from my 9 years of experience, click the link in the description and you guys can book a phone call with me. Now without further ado, let's get into my computer. Welcome to my computer, guys. Before we get into this setup and what it looks like, I'm going to give you guys two indicators that you guys need to use. If we go to indicators at the top, I want you guys to type in sessions. And you're going to get this one right here, Sessions Asia, London, New York colored. Then the next one is Asia, range and kill zones right here. Now you're going to go to the indicator sessions, click the settings, and all you want to have is the New York marked up. You do not need the London or the Asia. And with the color, you can make it whatever color you want. But I have the opacity on mine very low, so it's not really going over the candles and blocking the view of the candles. With the kill zones indicator, if you go to the settings on it, all I'm really focused on is the Asia session and the Asia range color. So if you go right here, you can make it whatever color you want. Now we can see we currently have the Asia range right here. And then this other gray shade behind the candles is the New York session. With this strategy, guys, we are going to be looking at the Asia session and the London session going into the market open. These are going to be the key times that we are looking at. As well, we do kind of want to look at the previous day and see what happened, because usually if the previous day is bearish, the current day is most likely going to be bearish and vice versa. So one thing that you can do that will make it easier to figure out like what trend may occur is looking at the daily time frame. Usually before I start trading, what I'm doing is a top-down analysis where I go from the daily to the 4-hour, and on the 4-hour I'm looking at this particular candle right here, the 5 a.m. to 9 a.m. candle. And then I go to the 1 hour and I'm usually looking at the 8 a.m. to 9 a.m. candle, and then I usually end on the minute 15 time frame. So when we are trading, I want to show you guys what we do not want to see when we're looking for this setup. We don't want to see choppy markets like this. We want the market to show us one specific direction. And we can see that happen right here with the Asia session. We saw the Asia session have very small candles. And then it kind of broke to the upside right here during the London. But overall, it broke the low of the Asia session right at the beginning of the New York session. So as the market open occurred right here, we saw the 9:15 to 9:30 candle was bullish, but it formed right here. If you guys see, the market opened, formed this lower high. So it made this lower low. We have this lower high. We have this reversal candle that closed at 10 a.m. right here, and that was our signal to sell. So what we overall want to see are very smooth markets. And one thing that I like to see too is I want to see very small candles. If I see a bunch of massive candles with long wicks, that's what I kind of define as choppy markets. So like this market right here, it went down, then shot up, then down. This is choppy, guys. You do not want to be trading markets like this. With this strategy, it does work on NAS 100 and the S&P 500. But overall, what we want to see are very, very smooth markets. Here is a really, really nice example right here. We saw the Asia session, and look at the previous day. Both of these days were really nice. Previous day pushed down, consolidated from the Asia into London, and then right at the New York open, look at how price just continued to drop perfectly. Now after this candle closes at 9:15 to 9:30, what is it? It is the market open. So ideally, let's say that we're going into a short position right here. the candles are already bearish. We have the bearish candles that are showing us that it's going to continue to go down. So what you could literally do is drop a sell right at market execution. Your stop can be right above this candle's wick right here. And then all I'm going for usually is a 2-to-1. So once I see it say risk reward ratio 2, that's telling me my TP is 2 times the size of my stop loss. And then what happens right at the market open? Price completely drops. So usually right before the market open, when you see a day like this, it doesn't happen all the time, but when you see the market have really small candles like this and it's gradually going lower and lower, and all these candles are bearish like this, it's most likely at the market open just gonna have a really nice big candle that will go in that same direction. And that's exactly what happened here. It had a bunch of small little red candles, bearish candles, then the market open came out, boom, made it drop like crazy. So that's overall what we are looking for on this setup. Let me go and show you guys this one on the previous day right here, because this setup was nice too. Now one thing that you guys can do is if you get this rectangle and you mark it up from the high and the low of the Asia range and extend into the future, you guys can see this is ideally what you want to happen that makes it a really clean setup. You want to see the Asia range, but you want to see price stay within the Asia range and then break one side and continue to go into that direction. So here it broke the low of the Asia range right here on this candle, and price continued to go lower and lower. That's what we want to see. We do not want to see price stay within here, then push up, then down, then up, then down. You guys don't want to see that. That would be qualified as choppy markets. So when you see a bunch of small candles like this, and then there's this one candle that breaks the lower the high, it's most likely going to continue to stay in that range. So what do we see right here? Right here, the 915 to 930 candle. After this candle closes, it's the market open. Now usually I want to see some type of candle, a spinning top, shooting star, bearish, bullish, engulfing, something like that, that's going to give me a lot of confirmation that the market is going to continue to drop. Now if you do not see a candle close like this candle right here, it closed kind of sketchy. Like I wouldn't be for sure, or I wouldn't be very certain that the market was going to continue to drop. So what you can do is if a candle closes, it doesn't close the way that you want, set a timer on your phone for 13 minutes. Go do some push-ups, go outside real quick, do something to preoccupy yourself for 13 minutes. After that timer comes off, wait for the next minute 15 candle to close, and if it closes more so how you want it, then you could take a trade on that. That's a major hack right there, because this candle wasn't looking nice, but then the 930 to 945, we could see this candle, it engulfed the wicks on these previous candles. And after this candle closed, that would have been a really nice recognition candle to tell us, okay, it's going to continue to go down. One thing too that I like to see is I like to see the candles close below the 20 EMA. So once the candles close below the 20 EMA right here, that was giving us good indication it was going to be a sell-off too. One thing too, look at right before the New York open, the candles dropped below the 20 EMA, price continued to go down. So what I like to look at, like I said a second ago, is if you look at the previous day, I call this a 24-hour cycle. What usually happened in the previous New York session may occur to happen in the current New York session, especially if it has very small candles like this and it's just dropping. Like, these are the markets we should be seeing every single day, guys. The markets used to be like this all the time back in 2019 and 2020. And now they're just choppy all over the place, indecisive, doing all these false breakouts where it's doing a liquidity grab and then comes down, trapping people to go long and then drops down. Just a bunch of BS, guys. So here's another day right here. Like, this qualifies too. Get our rectangle, extend it. We can see price broke the Asia high. It did come back into the range of the Asia session, but slowly but surely started to go up higher and higher. And what do we see right here? The candles are now above the 20 EMA. We could see we have this bullish candle engulfing these two candles. After this candle closes, take a buy, baby. Right here would be a perfect buy setup. You could ride it up here for an easy 2-to-1 risk reward ratio. Right here, guys. have your stops real tight below here, you could see offers a nice 2-to-1 right there. And the thing about this is a lot of these trades, if you're catching them at the right time right before the market open, they'll be hitting your TP within 15 to 30 minutes. So kind of go through your charts and look at this. Ideally, what you want to see is you want to see very small candles in the Asia session, very small candles in the London, but you want the market to gradually just be going in one trend, forming higher highs and higher lows. And then see if you could find a higher low right before the market open with some type of bullish candle if it's going up, and then enter after that bullish candle right before the market open and take it up. So this does form pretty often. Like, we want to see these really smooth days, not these choppy days right here. Here's another prime example right here. We can see the candles do close a little above the Asia range high, but overall, if you didn't get this candle right here, you could have saw it was a sell. But if you didn't enter at the market open, which I wouldn't have, you could have waited till this 930 to 945 candle close, nice wick to the top, rejects the 20 EMA, enter a sell right after it closes, ride it to the downside. So let me know what you guys think of this setup, and if you guys like it. If you don't, hey, it's not going to hurt my feelings, guys.